Good morning, Paul Georgie from Allendale, September 12th, Wednesday morning, and it's crop report day. Well, those of you that have been watching the price movement or have been able to, we've seen a quick drop, then a bounce in the corn market, and then now we're under pressure again as we speak. We're down about 15, 16 in the corn. Some of the key numbers, as we've talked about last few days, is the yield. The USDA put the yield at 122.8. That's down only half a bushel in the corn number. Trade average was 120.6, and then the soybean number was 35.3. So that was a little bit below trade estimates there at 35.5, and down about 0.8 of a bushel from last report. On the production side of things, we had talked about, will they change harvested acres? They didn't. They kept harvested acres the same. They put the total production of corn at 10,727,000, which is just slightly lower than last month's estimate, and beans at 2634. So that was a little lower than what the trade estimate. So the numbers were considerably better, larger than the trade was expecting the USDA to put out this month. Wheat numbers, on the other hand, they kept unchanged across the board. On the world basis, they did lower world wheat production or carryover to 176.7. That was down slightly. So, corn at 124, so that was actually a little higher than last month's August number, and 53.1, which is down just 0.3 of a ton on our 300,000 tons on the total basis. The ending stocks numbers, I think, is where the surprise came in on the corn. Corn ending stocks 733 for new crop. That they increased ending stocks there about 75 million bushel, and the old crop ending stocks went from 1.014 up to 1.181. Soybean ending stocks, they put that at 115, so that was unchanged from last month. So again, a lot of numbers, something for everybody, and something that the numbers will be chewed over here as we go through the next several hours of trading. Wondering now that will the USDA lower harvested acres in order to get the crop in line with what traders think they should be, and I think these numbers certainly should add some stability. What has happened in the futures market from a technical point of view is going to weigh on this market today. If we stay under pressure today, it'll be the third day below key chart support, sharply lowered this morning, and if we'd stay under pressure there, the technical action could kick in, and we could see another round of selling in the corn futures as we move forward here. If we stay below this key support area, which actually has been 786 level in the Dees contract, we've taken out the 770 level, and now chart watchers are projecting a possible move down to the 730 area in the December contract. Soybean futures a little more stable than the corn, at least as of yet. Stay tuned and stay in touch with Allendale's research. We'll keep you informed there. Some of the other events that we've been watching and going to be concerned about here today is the German Constitution Court. They upheld the funding of the ESM, which is good and caused some strength to the world equity markets and caused pressure to the dollar here in the U.S. The next event that we've got to wait for is tomorrow when Dr. Bernanke, Fed chairman, will give us a news conference around 12:30 regarding the FOMC meeting, and it's anticipated that there'll be some talk in that and some indication that there will be some type of a QE3. So that's the next step that we've got to watch here that could have a big impact on traders' attitude and investment attitude as we go forward. Weather, not a big factor, but something to monitor here in the southern hemisphere. The livestock markets, we've seen support come in there. Weaker grain prices have certainly changed attitudes in the cattle market and in the hog market. Cutout values kind of given us an indication of what the attitude of the producer is. We're seeing the choice beef up 21, select was down 148. And that kind of gives us an idea that feedlots are moving these cattle ahead quickly. High feed cost and high losses is certainly putting pressure on the feedlots to move cattle, and I think some cheaper corn here may change the direction of this cattle futures as well. Hog futures, we've seen fund buying, spread adjusting yesterday. When you look at nearby versus deferreds, there's been a lot of spreading there. Pressure on the deferred contracts as cheaper corn prices indicate that maybe we'll have a bigger supply down the road. So a lot of things going on. Again, a lot of reasons to stay in touch with Allendale's advisory service. Give us a call if you need, 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning.